the global wealth and asset management market is a $110 trillion market. So 1% of that coming into Bitcoin is $1 trillion of inflows. We've been very excited with these Bitcoin ETFs because they've gathered $10 billion in assets.
Hougan begins by discussing the growing acceptance of Bitcoin within wealth and institutional portfolios. He mentions that within the wealth management space, there is increasing talk of allocating 3% to 5% of portfolios to Bitcoin. For institutional investors, the suggested allocation is around 1% to 2%. To put this into perspective, Hougan points out that the global wealth and asset management market is worth $110 trillion. Therefore, even a 1% allocation to Bitcoin would translate to $1 trillion of inflows. Hougan explains that institutions aim to own a piece of all available assets, from stocks and bonds to real estate and venture capital. In this context, Bitcoin is now part of the global market, with a market cap of around $15 trillion. He predicts that this will grow to many trillions in the future. According to Hougan, not having a small allocation to Bitcoin means missing out, as the neutral position for institutional portfolios will likely include at least a 1% allocation to Bitcoin.
The global wealth and asset management market is a $110 trillion market. So 1% of that coming into Bitcoin is $1 trillion of inflows. We've been very excited with these Bitcoin ETFs because they've gathered $10 billion in assets. But, that's sort of 1% down, 99% to go. So there is a lot of room in this space. One thing that I should say, if you think about the base case for how an institution invests, they actually just want to own all the assets in the world, right? They want to own all the stocks. They want to own all the bonds. That's why you hear so much about index investing and, say, owning the S&P 500. They don't want to pick one company. They want to own the global market. If that's your perspective, Bitcoin is now part of the global market, right? It's $1.5 trillion. In my view, it's going to many trillions of dollars. If you don't have a small allocation to Bitcoin, you're actually missing out. You're actually short. The neutral position is going to be a 1% allocation, and then there'll be some people who are 2 or 3 or 4 or 5, and other people who are 0. That's fine. But I think the base case, 5 years, 10 years from now, is that Bitcoin will be in most portfolios alongside stocks and bonds and real estate and venture capital and these other assets. And that's going to be, really significant. And I will say that will lift up Bitcoin, make it more robust, and actually enable future use cases of Bitcoin, like being a true settlement rail for international commerce that's apolitical, being a true, means of payment in other spaces. The beautiful thing about this movement of wealth into the space is it will help Bitcoin achieve those goals by making it bigger, less volatile, more broadly accepted, et cetera. It's sort of a stepping stone to where I think Bitcoin is going. But if we look at what's going on in Bitcoin, it's been growing at an exponential rate for 15 years. User adoption has been increasing cycle over cycle. And I think we're finally reaching sort of that escape velocity point where people will start to see the numbers. I'll also add that sort of the growth we've seen in scaling has unlocked the ability to have these sort of real world use applications. So I think we're pretty close. You can see it with the approval of the ETF, right? How many investors could access crypto before the ETF in the US? Maybe 1 in 5. Post ETF, within a year, it's going to be 5 in 5. And so you're going to see that sort of exponential growth curve. I often get asked, when will my father be using decentralized apps or crypto on a day-to-day basis? And, he already has some investments in Bitcoin, but I think it will start to feel mainstream within the next 2 or 3 or 4 years. I do think we're at that sort of turning point. The people who engage with Bitcoin, the vast majority of them end up investing because it's such a compelling narrative and such a compelling speech. I do think the ETF helps move that forward. You mentioned gold. People don't remember this, but before the gold ETF, gold wasn't really an institutional asset. You didn't have pension funds buying it. You didn't have wealth managers buying it. It was sort of this obscure asset class that you bought via coins from, little shops in Times Square. It wasn't an institutional asset. The ETF helped that. I think that's going to happen with Bitcoin. But I love that you brought up that we're in this digital world. I think that's a good way of framing it and maybe helps break down some of the skepticism that people raise against Bitcoin. But look, everyone's going to get there. We've been moving in one direction for 15 years. I think the next 15 years is going to be exciting, and it's going to be fun to watch. Bitcoin is at the center of this ecosystem. It has the most compelling use case. It's addressing the largest market. I think there are various other interesting things you can do with public blockchains outside of monetary uses, and it's interesting to see those evolve and develop. And I love watching that. I do think it brings people into the ecosystem. But if you ignore Bitcoin, you're ignoring by far and away the largest addressable market that public blockchains are going after. And Bitcoin has an unassailable lead and the perfect design to address that market. So, I know maxis love you only to love Bitcoin. I find the experiments in other sort of blockchain-based applications interesting, but I think they're wholly separate from what Bitcoin is going after, which is this new monetary asset. And it has, as I mentioned, an unassailable lead, and that's the largest market that crypto is going after. So it's very exciting, and it should be part of any crypto investor's portfolio.
Hougan highlights Bitcoin's exponential growth over the past 15 years, with user adoption increasing cycle over cycle. He believes that we are reaching a critical point where Bitcoin's adoption will accelerate significantly. The approval of Bitcoin ETFs in the US plays a crucial role in this growth, as it provides easier access to crypto investments for a broader audience. Hougan compares the impact of the Bitcoin ETF to the gold ETF, which transformed gold from an obscure asset into an institutional one. He expects a similar transformation for Bitcoin, with ETFs making it easier for retail investors, wealth managers, and institutional investors to access Bitcoin. This democratization of access is critical for the widespread adoption and acceptance of Bitcoin. Hougan is optimistic about Bitcoin's long-term prospects. He points out that Bitcoin has the most compelling use case among cryptocurrencies, addressing the largest market as a new monetary asset. He acknowledges the potential of other blockchain-based applications, but emphasizes that Bitcoin remains the most significant player in the crypto ecosystem.
The halving will remove $10 billion in new supply from the market every year based on current prices. That's a lot, right? People spend all this time modeling Bitcoin and trying to come up with sophisticated models, but it ultimately comes down to supply and demand. And because we know supply, it ultimately comes down to demand. And right now, there is a massive new net source of demand for Bitcoin. And until that, and it's overwhelming the amount of new supply. And that's why you're seeing prices move up. And if we can clear this sort of all-time high hurdle, I think there's significant room above that before we run into another sort of cliff of sellers. So it's an incredibly attractive setup for Bitcoin. That doesn't mean there are no risks, doesn't mean it won't be volatile. Of course there are risks, of course it's volatile, but at a fundamental level, when you talk about the fundamentals driving this market, they're just extremely attractive. And the fact that we have the ETF approval and the halving lined up so close together, it's wonderful. The beautiful thing about an ETF is you can think of it as a way that every investor can access the market in the way that the largest institutions in the world can. So my father can buy the same ETF that the Harvard Endowment would buy at the same price. That's the beautiful democratizing thing about the ETF. What we've seen in BITB, we've definitely seen retail investors accessing it. We've definitely seen wealth managers, financial advisors accessing it. We've seen hedge funds and venture capital funds accessing it. And we've seen, we had our first corporate client come in and put Bitcoin on the balance sheet via our ETF over the last few weeks and is building a very substantial market. Not yet accessing it, but investigating it are big wirehouse platforms like Morgan Stanley, pensions, endowments, and traditional institutions. But I would say that this wealth market is bigger than people think. Maybe most people don't know this. The US sort of wealth management market has three buckets. It has retail investors, it has wealth managers, and it has institutions like endowments. And everyone talks about institutions because it's very sexy, right? They're the most serious investors in the world, pension plans, et cetera. But actually the wealth market is just as big. The retail market's about 20%, wealth market's about 40%, institutional is 40%. So I would say that 60% of the market is accessing it today, and the remaining 40% is coming online. But if you play this out in 2 years, every investor will have the ability to easily access Bitcoin. And that's going to be good for the space. And the last thing I would say, there's of course an irony in having an ETF for Bitcoin, right? Bitcoin is about the ability to self-sovereign wealth and hold it directly. And an ETF wraps that in a financial product, and we recognize that. But the movement of these institutions into the ETF is supportive of the core mission of Bitcoin as well. It makes it a bigger ecosystem, a broader ecosystem, and it doesn't take away from the people who want to do it the original way and hold it themselves. It's sort of a rising tide that lifts all boats.
One of the most exciting aspects of Bitcoin ETFs, according to Hougan, is their ability to democratize access to Bitcoin. He explains that an ETF allows every investor, from retail to institutional, to buy Bitcoin at the same price. This accessibility is a game changer, enabling more people to invest in Bitcoin and participate in the crypto market. Hougan acknowledges the irony of Bitcoin ETFs, given that Bitcoin is about self-sovereignty and direct ownership. However, he argues that the institutional adoption driven by ETFs supports Bitcoin's core mission by making the ecosystem bigger and more robust. This increased adoption doesn't detract from the original vision of Bitcoin, but rather complements it by providing more pathways for people to engage with and invest in Bitcoin. Please like and subscribe my channel.